you said in that speech that this asset class is rife with fraud, scams, and abuse. And I want to understand exactly what you would like to do.
Welcome back, everybody, to Altcoin Daily, where you subscribe because you're interested in making money with cryptocurrency, and this channel keeps you informed. My name's Austin. In today's video, of course, I want to update you on the latest news involving altcoins. But first, our top story of the day, SEC Chairman Gensler has issued an official warning for cryptocurrency investors in 2021. Let me keep you updated. In a speech at the Aspen Security Forum on Tuesday, Gensler said he agreed with Jake Layton, his predecessor at the SEC, who once famously said that in his view, every ICO I've seen is a security, which is most altcoins out there today. Even Ethereum, when it first launched, had a token sale. In a direct quote, generally, folks buying these tokens are anticipating profits, and there's a small group of entrepreneurs and technologists standing up and nurturing the projects. I believe we have a crypto market now where many tokens may be unregistered securities without required disclosures or market oversight. And Gary Gensler wants that to change. He wants to provide that oversight. Luckily for us, Gary Gensler went on CNBC this morning and gave a little bit more detail. Let me play you 3 clips, starting with this first one. What does Gary say needs to happen next? Watch this.
So what has to happen? Do laws need to change? Do you have the authorities that you need?
It's a great question. We have robust authorities, and in some places it's pretty clear. Many of these tokens, just given how they were issued and sold and so forth, come under the securities laws. It's a facts and circumstances situation. But then on the trading platforms, as well as the lending platforms, many of those are standing astride regulation. Now, if they're trading securities, they've got to come in, and I'm encouraging them to come in, and let's talk to them. Let's have a frank discussion. But many of them right now are trying to stay, dealing with their lawyers and trying to say, we're not going to come in. And that doesn't really make good sense for the markets. Now, Congress, we're going to also work with Congress to see if we can fill gaps in the authorities.
Interesting. So the 2 parties the SEC is going after are, 1, these ICOs, these token projects. And that's nothing new. They've been going after these token sales for the last 5+ years. We expect this. But 2, also these crypto platforms like exchanges that have listed some of these said tokens. He wants them to come in. He says, we'll work with you, but you are at fault. Any time in this video, feel free to give me your thoughts down below in the comment section. I will play you 2 more clips, then give you my final thoughts. But next up, what exactly does he want to do with Congress? He mentioned Congress. What's the plan there? Watch this.
When you say you want to work with Congress and fill in these gaps, what are the authorities that you don't think you have, that you think you need to have in order to ensure this idea of investor protection?
I think that the most critical thing is around where we, the public, can go to trade, or we, the public, might lend this crypto on a platform. And if the platform has both securities, which many of these tokens are, but also commodities on the same platform, how to deal with that, how to deal with, along with our sibling agency, one that I was honored to chair, the Commodity Futures Trading Commission, and stitching that a little bit together, because some of these platforms have both commodities and securities.
Okay, interesting. Gary Gensler wants to work with Congress just to get some clarity in crypto regulation. That by itself is fair. I think we all want some aspect of that. Of course, like always, the devil is in the details on whether this will be bullish or bearish regulation. We don't know yet. But let's just cut the BS. Let's end the guessing game. Gary, Altcoin Daily is a very simple channel. You make the statement, I will report the news to my audience. So when you say some altcoins may be in regulatory trouble, which altcoins specifically are you talking about? Watch this.
You just described some crypto as securities. Other SEC chairs
many
prior to
tokens
you
are.
have not. which ones do you think of as securities, and which ones do you think of more in either a commodity basket or some other kind of asset basket?
You know, Andrew, I hate for your viewers to keep going back to this, but it's pretty clear, and the Supreme Court has actually spoken about this many times. If somebody is raising money, selling a token, and the buyer is anticipating profits based on the efforts of that group, the sponsor, the seller, that fits into something that's a security. And I'm not going to go token by token. You can imagine why I wouldn't do that. But my predecessor, Jay Clayton, who you have on the show often, Jay said it best about 3 years ago that he really hadn't seen many tokens that didn't meet that securities test.
Okay, so Gary doesn't really give us much. In my opinion, from what we've seen historically in the few instances that this has happened, the SEC is willing to work with these crypto projects. For example, they fined EOS, they charged EOS as being an unregistered security, and they fined them a minuscule amount of money compared to what they raised at the ICO. And that is because EOS went to them and said, hey, well, let's talk about this, let's work on this together. And of course, on the other hand, we've seen the SEC completely go after and shut down a lot of lower cap, crappier altcoin projects, and it had a lot to do with the language they used when they did their ICO, meaning did they promise profits? Or how did they use the specific language when raising money? Again, for better or for worse, it seems the devil is in the details. But that brings us to our next obvious question. I get that Gary can't talk about every altcoin, but what's your view on XRP? Surely you can give us some insight into that. Well, watch this 15-second clip of Gary not giving us any insight. Watch this.
But I'm looking at a screen. We have a screen of cryptocurrencies on the list: Bitcoin, Ether. Would Ripple, for example?
Yeah, Andrew, I know you're going to try that, but we have an enforcement case, and I'm going to leave it at that, Andrew.
Ouch. Andrew of CNBC rejected. Now, give me your thoughts down below. I do want to update you on the latest altcoins making news. But the last thing I'll say about this is the small silver lining in all of this. Gary Gensler does understand cryptocurrency. Before he was SEC chair, he used to teach classes at MIT on what is Bitcoin, what is Ethereum, why do cryptos potentially have value. Meaning he's not coming from a place of ignorance when he speaks about cryptocurrencies, he is coming from a place of understanding, which is very different than other heads of the SEC that we've had before. Now, regulation can still ruin no matter how much understanding you have, so I will keep digging, I will keep searching, and I will keep you updated as more information comes out. Watch this final clip of Gary Gensler comparing cryptocurrency regulation today to speed limits or automobile regulation back in the day. Watch this.
I'm very pro-innovation. I think it helps the economy grow. I think more people get access to finance and access to good medicine, access to good jobs. I think I wouldn't have gone to MIT. I've been a professor there for 3 years at the intersection of finance and technology amongst some of the world's remarkable experts at MIT. So I count myself as pro-innovation, but I think that we also need rules of the road. Automobile came along 100 plus years ago, and if we didn't have rules of the road, Detroit wouldn't have been able to sell those automobiles. Those good factory jobs wouldn't have been created. Those good union jobs wouldn't have been created.
Right.
Without rules of the road, the people had confidence and trust in the automobiles. Similarly, we need trust in markets and trust in finance. This innovation, Satoshi Nakamoto's innovation, if it's going to meet its potential, needs to come within public policy frameworks.
Okay, moving forward, first piece of altcoin news, NBA Top Shot to sell NFTs in person at Summer League games. And this affects all Flow altcoin holders. As you know, NBA Top Shot issues NFTs on the Flow blockchain. It might be the NBA offseason, but Dapper Labs has big plans for its NBA Top Shot crypto collectibles platform for the rest of the summer. Today, Dapper revealed that the service will offer exclusive NFT moments that can only be purchased at NBA Summer League games in Las Vegas. So yes, this will be big awareness for the Flow altcoin, but also why this is significant. This marks the first time that the service, which sells NBA highlights packaged as rare trading card-like digital moments, has created NFT collectibles that can only be purchased from a physical location. It's also the first time that NBA Top Shot moments will be available for the purchase at real NBA games, even if these are off-season games that will primarily feature newly drafted rookies and minor league G League players. But for what it's worth, still pretty cool, especially if you hold Flow, the altcoin. Next piece of news, altcoin BSV suffers a 51% attack. No more than 14 blocks were reorganized. So here are the details. BSV suffered a 51% attack Tuesday morning, according to an analyst from the crypto intelligence firm Coinmetrics. Around 11:45 a.m., some serious hashing power was unleashed on the network, says an analyst from Coinmetrics, and the intelligence firm later corroborated his report, tweeting that its blockchain security monitoring tool, Farum, saw a 14-block reorg of the network. For those who don't know what a 51% attack is, a 51% attack occurs when malicious miners take control of more than 50% of a proof-of-work blockchain. The attackers can take advantage of block reorganization, a feature meant to clear up instances when two miners have mined the same block. So miners mine the same block all the time usually isn't a problem, except when you have a weak network and somebody controls over 51%. Broadly speaking, when two versions of the same blocks are mined, the system defaults to the longest chain. By mining faster than the honest miners during a 51% attack, the assailants can create a longer chain such that the system will render the honest miners' blocks invalid. So it's fine now, but this did happen. The price obviously took a dip, and we just don't know who did it. There is no clear indication of who the attacker was, and Coinmetrics is still looking into the attacker's chain for traces of double spends targeting exchanges. So we don't know, we probably won't know, and this will probably happen again. From what we've seen with Ethereum Classic, they've been 51% attacked several times, and for some reason that coin still exists. But give me your thoughts. Let's keep moving. Hey, by the way, be sure to check out our latest interview dropped this morning with on-chain Bitcoin analyst. We go over the hard data of what is happening on-chain with Bitcoin. We have a clip, and then we have the full interview. Seek out this interview, watch this interview, great stuff. Next piece of lower cap altcoin news for FormationFi. Just as a reminder, FormationFi is aiming to be the end of yield chasing. Welcome to the cross-chain risk parity smart farming 2.0. Quite the mouthful, but let's check out this update. They're announcing the soft launch. FormationFi announces soft launch part 1, the first ever dual vault cross-chain stable swap pool for BUSD and USDT. So how this affects you, why this may be significant to you, is because at a 1-to-1 ratio, this is providing simple and practical swapping from USDT on ETH to BUSD on Binance Smart Chain, and vice versa, with balancing fees, dynamic rewards, and up to 10 times cheaper transaction costs. And maybe this doesn't matter to you if you're just a casual crypto investor, but if you're a yield farmer, if you're trying to find the best returns, this may matter to you. To make things more practical for easy use, both of the assets will be pegged to keep a $1 ratio no matter the market conditions. This is not a traditional bridge or AMM pool. Instead, we decided to use vaults on both sides of the chains to enable the ability to provide sweet, stable APYs and trading fees for our liquidity providers. These vaults will act as a backbone for the BUSD-USDT cross-chain swap pool. So if you're interested in learning more about the specific algorithm, about all the details, check out their Medium article. In terms of when this is happening, when is the soft launch? Well, the code is awaiting for final audit. Once complete, date will be announced. So stay tuned. I will keep you updated. That is the video. My name's Austin. Like always, see you tomorrow.